volatile. Countries are going to see these markets going down. We were just talking about the Nikkei. The whole world watching. They're seeing these financial markets and the volatility that we're seeing as well. And there's going to definitely be some very interesting headlines come across. And TopStep's International, we have traders all around the world. These are futures. We trade all different futures markets. We have currencies. We're talking about currencies. We could talk and we could take a look at, for example, we have like the euro dollar, the Japanese yen. Look at the Japanese yen. It's going straight up, right? So we have access to all of these different types of markets, and we're going to see volatility like this. It's the futures markets. I know we focus on the Nasdaq and like the ES and like a select handful, but TopStep is international with all of these different, tradable instruments here in the futures. I mean, look at the spread on the dollar yen. It's one tick, whatever you want to call it. And so if you're seeing like the Nasdaq untradable, there's opportunities elsewhere. I haven't traded the yen for very long, or I haven't traded for a while. I know. Is it Paul? You said, Coach Jay?
I was actually on his scouting report during at the buzzer today. I asked Paul every once in a while, hey, outside of the markets that we look at all the time, is there something that you're looking at that has the potential to move? He said the yen, and he was looking to the upside. He trades it all the time. He usually swing trades it, but it does present some pretty good day trade opportunities.
Yeah, perfect. I mean, that's a beautiful example where we're so narrowly focused on one market, and if that's not tradable, you have two choices. Just probably the best choice, number one, is to step away, don't trade it, wait for things to settle down. Number two, if you want to practice something, you could practice some other market that's not moving so sporadic. I mean, currency pairs, I know D talks about like gold's been moving a lot, right? I mean, it's not as wild as the Nasdaq at times. We talked about crude oil's selling off, right? Crude oil's straight down, that $2 move in that, the past few hours, right? So that's interesting.
Soybean oil.
What's okay, Jay? Okay, what's the symbol for what's the symbol?
ZL. Look at the chart.
Okay,
gap down.
Okay. Yeah, we gap down and we're rallying. Soybean oil. Wow. Okay, that is one heck of a chart, right? I've never traded this market before. Someone's shouting out natural gas. Let's take a look at natural gas. And I mean, it's interesting. So there's plenty of markets in these futures. I mean, copper is another one of those markets that's been in conversations, right? But yeah, I think just sitting on my hands, man. Sitting on my hands, talking about lean hogs, hoop, talking about cattle. Let's take a look. I mean, here's one. Bitcoin. What's Bitcoin doing? Bitcoin and MicroStrategies. How are they?
Bitcoin sold off pretty hard, but we're still kind of in the, Bitcoin is still kind of holding up. If we look at the daily, we've been holding up the 200 moving average on the futures, 200 moving average on the daily. We've just been consolidating over it. So it looked like it sold off. It looked dramatic, but this is actually holding up better than the equities right now in comparison.
Interesting. It's interesting how gold's going up and Bitcoin's going down. Yeah,
right.
I have no idea, but I'm still so confused on the exact correlations on Bitcoin versus gold versus the equities. Sometimes it seems to have a mind of its own. Sometimes it seems to follow the equities, but it's just as volatile, right? Like if we measure that high and low of Bitcoin since that announcement, that's 7.5%. So still a very volatile market. And trade down, size down. That's all I could just keep saying. Size down, don't trade, just be patient, wait. There's no sense. Trying to predict this market is I couldn't imagine. I don't know if it's just me.
Can you do me a favor? Can you pull up the 10-year on your side if you have it? ZN?
Yeah, ZN. Oh, is it going up?
It is, but look at that order book.
Yeah, there's that order book.
You don't have the data for it, but even then, you can see it one level up, one level down. Those are markets that even in this volatility, there's going to be some liquidity out there. Right? I'm looking 10 levels up and down on Quantile right now, and there's still 2,000 lots sitting out there. So there are markets where they're still going to be volatile, but if you're not looking for 50 tick spreads, there are places that you can trade, or go outside and wait till the volatility dies down.
Yeah, go spend time with family, go eat dinner, do something else, right? And I just want to just continue to stress the difference between the different DOMs. Maybe I could add another DOM here, and we could do a nice side-by-side comparison of what. I don't know if using the word healthy is the right thing, but comparing the difference, right? Because traders need to see the difference on understanding a depth of market, understanding liquidity, understanding this concept. So over the right, we have the Nasdaq Mini. Over here on the left, I'll go to the Nasdaq Micros. So pretty close to the same price, but you see there's a visual representation of the difference between the two, of how one has a pretty tight bid and ask, right? The spread's not too bad. But over here on the Nasdaq, it's looking a lot better now, Coach Jay. It's looking a lot better, but still, you can see the difference. It's clear. And then we take a look at the ES. The ES, let's take a look at the ES. Okay, ES is a lot more stable, and then that MES probably looks pretty healthy. Yeah, that's much healthier right there.
Yep. Yeah, so it's like Hogue says, the blood is coming back into the market, and it should even more during the New York session. I'm still seeing some gaps in prices here in the Nasdaq, but it's why I wouldn't trade it right now. But we can continue to talk about it.
Yeah, we can talk about
any questions? Yeah, we can. Sony says, should we trade MES tomorrow? Then I like that idea.
If you are trading, trade micros, whether it's ES or NQ or anything else. Like if you are going to trade tomorrow, I would just strongly suggest trade micros. Maybe there's, I know I'm going to lock myself out until 30 minutes after the open, because we'll have the New York session open. That's volatile, could get crazy. And maybe 30 minutes after, we might see some things start to stabilize. Then I'll be a little more tempted to trade 30 minutes after the New York session open. Things settle down.
Have you ever gotten caught in a halt?
No, not in my day trading. Not in my day trading futures. In options, yes, I have. But that's something I'll swing over like weeks, right? And COVID, there was plenty of halts.
I definitely got caught in some like low cap, no cap stocks, and I'm like, oh, why am I trading this thing? And then all of a sudden the chart stops moving, DOM stops moving. I'm like, oh, wait, we're stuck in this position. It's nice when the halt, when it gets unhalted, it moves in your favor, but when it moves against you, not fun at all. Coach Robert says he was caught once. Yeah, it's not fun.
yeah, I couldn't imagine getting caught in a halt day trading. That's got to be the worst feeling ever. Because
Yeah.
usually when you're day trading, you have more leverage than when you're holding a trade for over a month, right? And
Yep.
you don't really care about the little small incremental price action. But when you're day trading here, you're looking at points, right? You're trying to make ticks, and that could be scary. That's for
Yep.
sure. I definitely do not want to be caught in a halt or even close, right? That's why we're talking about levels. That's why we're talking about the 2%. And remember, the 2% rule, it does not only apply for the downside, it also applies for the upside. Very rarely do we get 7% up in a day, but it definitely can be possible. It's always fear that leads this market to hitting those circuit breakers sometimes.
Yeah, what would that even look like if we were to get a 7% day? Because it would have to be news, right? It would have to be like, hey, actually, this was a late April Fool's joke.
Yeah,
There are actually no tariffs.
was there a limit up or a circuit breaker to the upside? Was there any limits during COVID to the upside? I think that'd be the only.
I feel like there might have been one.
Interesting. Yeah.
I feel like there might have been one to the upside during COVID, but I could be wrong.
Okay.
I know there were a couple to the downside.
Yeah, it's based on percentage, not points, because yeah, I know if this market from the top. I mean, a moment ago we were at 20,000. Everyone, just remember, a moment ago we were at 20,000, and from the high to the low, that's 1,200 points here in the Nasdaq. And just imagine if somebody's holding a single contract throughout this 1,200 points. That's what? That's $24,000 on one contract here in the Nasdaq. $24,000 on one contract.
Wow. Would have cost you double the margin to hold it.
Yes. Yeah, if you guys, I seen you in the chat. There's a reason why brokers doubled the margin, increased margin rates before times and during times of high volatility. And this is a beautiful example of why. So unpredictable. We get stops, 7%, 20,000, 14 key points. Just going through reading some chat. Let us know if you have any questions. We'll try our best to answer them. Covering these markets, like I said, this is going to continue maybe throughout the rest of the day, the next 24 hours, maybe even in through non-farm payroll. It's crazy. It really is. Hopefully things settle down.
Let's take a look at the levels for this gap in the S&P.
Order filled.
Closed at 55.84 half, opened up 55.50. But remember, the percentage numbers that we're looking at, settlement was much higher in the S&P. So we can go with this price gap here, 55.84 half down to 55.50. But settlement was up at, let me get that price. It was much higher. It was somewhere up near 5700s. So when you look at that percentage, remember, it's marking it from settlement. So there's a much bigger gap if we're looking at it that way.
Okay. Yeah. So real quick, so the limit up only applies during overnight. There's no limit up during the U.S. session. That's interesting. There we go. Nightbot. Plugging in Instagram. Wow. Seems like some complicated risk. So 2% plus 5%, it closes you out. Depends. Like it's like a circuit breaker, right? If the market goes so far so fast, then it halts for a period of time.
Are you guys analyzing stats? Want to do some stats tonight, Dakota?
Yeah, we can do it near the end. I mean, like I said, these markets come first right now. I'm just making sure everyone understands what's going on, understands about the limits, understands about everything.
A market that's getting close again. The Russell is continuing to sell. Right now, the Russell is down 4.68%. So for the 3 Russell traders that we have out there, you are approaching that limit that we cannot trade.
Zoro says, wow, Dakota, you not commenting on my comment. Thought it was about interaction both ways. I have no idea what that means, man. No idea what that means. I just commented on that comment. Why is it getting hard to trade these days and how to avoid overtrading? Size down. I recommend less than 10 trades a day. 10 trades a day and less. Anything more than 10, I consider overtrading. For myself, anything more than 5 trades a day is pretty high. We sound like a bunch of geeks.
Isn't that what we are? We sit here and stare at lines going up and down on charts all day.
Numbers. Yeah, these are numbers. Numbers going up and down. Right. I'm not going to be putting in an overnight trade. I'm locked out. Not during this price. Not during this price.
All right. Someone's asking for the exact price of 5% down in the Nasdaq. Settlement was 19,758. 5% is 18,772. Right, that's a rough estimate. Don't hold me to it. Don't be in a trade and it hits 18,773, and you say, hey, well, you said 772. It gets close. There we go, Coach Robert. 18,770. Don't trade around those prices.
Okay, and then it resets after the next settlement, correct?
Correct.
Yep. So after tomorrow at the same time, it's going to be different.
Is that kind of just chopping around 19,000 here?
The chat's going too fast, everyone. If I missed it, copy paste, baby. Don't spam it. Just copy paste. Do you guys think it's a good idea not to trade tomorrow? Sure. It's very volatile. I think size down, wait for the market to stabilize a little bit, and then sure. Here's the thing: we're day traders. Day traders love volatility. We're getting volatility now. We need to be able to trade. Oh man, how do we do that? Because it's almost like a catch-22. It's like we love volatility as day traders, but this is too volatile. There's definitely a sweet spot, right, where we want volatility, but we also want liquidity and predictable.
It's like cake.
Yeah,
it's like cake. I love cake, but when you cut a slice of cake that's too big, it's just like, what am I supposed to do with that?
Yeah,
it's too much
sweet, too bitter. And it's just like, I want good price action. That's what I want. Very volatile, but good price action. We've seen some good price action today in the New York session. During that whole entire sell-off, right, this major sell-off, you can argue that was, crazy. Like, how do you get in? How do you get out in a live account? When we first opened up, that was pretty crazy. Now we're starting to see it. Now when I'm watching this is, maybe price action is looking a little bit better now. We're not within 2% yet, right? We're down, what? Just under 4% right now. We're down -3, -3.7, 3.8. And we're starting to see the market stabilize a little bit. We've seen buyers coming in. And so there's definitely opportunity. But you have to manage your risk. That needs to be the number one question as you place a trade. Where do I manage risk?
Switch over to your screen, Dakota.
How do I manage risk? Oh, and there we go. And so yeah, there we go. I'm just watching this, looking at this price action. You can see this price action in these 900s when we're selling off. It's a bit sporadic. We're talking about the bid and ask, right? The bid and ask, and comparing that to like what is good price action? What's a stable market? And then we're zooming into like the 100 tick chart. And I like to do this analysis to say, does it make sense to trade? We love volatility, but I mean, you have to manage risk first.
100%. And does the rule apply to combines? I don't believe it does. It is on the TopStep website. So let's just read through that. Let's just make sure. Don't want to misquote. What do you laughing at, Dakota?
You answered a Pete comment?
I don't know.
I don't know. Dakota, do you consider risk management the most important aspect of trading? Yes. Yep. Risk management to me is the most important part about trading. Dakota, what's the biggest live account trade you made on slow markets, not fast markets? Which day or episode? I've had a few big trades. One with you, Coach Jay. I had 30 long minis. I made like...
Was that Nikkei or Nasdaq?
It was the Nasdaq, not the Nikkei. I think I made like 11 or 12,000 on that one. I don't know. It's been... I don't know. You have to... I don't have that stuff memorized. I feel bad for long-term traders, but it's kind of interesting to witness this. I don't feel bad for long-term traders. Now remember, long-term traders are looking long-term. What we're seeing now is intraday, weekly, maybe a month. When I think of long-term, when I think of retirement, when I think of 401ks, I'm thinking 5 years, 10 years, 20 years from now. And the U.S. market has been through a lot, yes, and will have big events come and go. And this could definitely be an opportunity for money to be put to work on maybe some good companies. Maybe not today, maybe not tomorrow, but maybe next week, maybe when things start to stabilize.
Settle down a little bit.
Settle down, yeah. Yeah, I mean, there's a reason why they say buy the dip anyway. Now, that might not be on a daily basis or weekly, but, in 20 years from now, maybe we look back at this and say, yeah, this could have been a good opportunity to put some long-term cash into the money. Maybe Warren Buffett's in all that cash.
Looking at NVIDIA right now, trading $105 in the overnight session.
105. I remember it was down at like 98 back in August.
A couple months ago, yeah.
So
in August. Yep.
And we're still higher than then.
You know what's holding up pretty nice, Dakota?
Gold. What?
CVS.
Build-A-Bear. Is Build-A-Bear holding up? That was my stock of last year.
Trade of the year by CVS at $47. There was a question. What should I risk on my 50K XFA?
Order filled.
Then 10% of the drawdown in a day. That should be your max loss limit. Right, so the drawdown limit to start on the day is $2,000. So don't risk more than 10% of that.
Yeah. Look. Where can we see these markets going to? I'm going to do a quick analysis, technicals. Now that things start to settle down just a little bit, Coach Jay. Now, I'm looking. We've seen this the low of August. I'm looking that this market could have a very realistic chance to return to 18,100, maybe some of these August lows, 18,100, 18,400. I posted that on the Twix, on the Twitter, Monday, I think. Monday, maybe it was Sunday. I was asking, can this market see 18,200, these lower 18,000s? Well, we are on our way. We are on our way. If this market continues, this would be the first level I would be looking at and considering, could this be a buying opportunity? Maybe there's an argument for a little bit higher. It's a bigger zone. I'm not sure, but we definitely need some more market structure now after this news. Maybe non-farm payroll will be that. Will be the signal, will be the cause of us to move all the way down here or find some type of support. I thought we was getting it. It was looking good. It was looking good for a few days until that's kind of usually how it works, right? Looks good for a couple days and right back down.
Looks great until it doesn't. If we can pull out my charts real quick, I did mark out some levels during doing the Sunday kickoff.
Yeah, let's go. Let's see it.
So these are trading view charts. This is the NDX, the underlying asset for the Nasdaq futures that we're trading. And because this is closed, we're not seeing this price action. But when we open up tomorrow, we'll be somewhere down here near this 19,000. The level I have down here, 17,800, is what would be officially a bear market. Let me get these ads out of here. But this would be officially a bear market down here. We're probably opening up tomorrow down about 15%, somewhere around there. So another 5% to go. Right now we're in what's called correction territory. And then if we look at the futures, a little bit different, but we are right now right at that 15% level. 20% puts us at what is that? Right below 18,000. Right above 18,000, like 18,003 from the all-time high.
Interesting. Yeah, 50. And what market? That's Nasdaq. Okay.
This is Nasdaq. Yep.
Yeah. Correction territory. We still have some. I mean, this market can still keep going down as well.
For sure, there's a lot of room.
Sorry, says Dakota, have you changed or tweaked your strategy at all, considering you're in a drawdown right now, or are you still stuck in your process? No, I've been making adjustments. Monday turned out to be an amazing day. Monday, I made just over 9,000. Last night, you guys seen a trade, I gave back 5,000, so I'm up just over 4,000 for this week still. And this just obviously markets change. We see that happen very fast. We've seen it happen today, where right after the bell, the Nasdaq shot up to 20,000, and then we sold off to under. We're sitting at 19,000. So even though we might think, okay, this market's starting to stabilize, we're finding some type of structure, news event, something happens, market changes. We are now in a new environment today than we were over the past few days. And now we have non-farm payroll coming out Friday. So tomorrow is going to be different than Friday. And then how's next week going to be? And it's honestly, these changes in these markets, it's rapid. Like, we need to adjust as traders a lot quicker than what we used to, at least than I remember over this, Yeah, it's been very. These markets have been changing so frequently, Jay.
Yeah, they have. We got a question here from Jared. What's the best way you both have found to fight anger in trading? The one thing that has held me back is getting angry at minor things. It's my competitive nature, but it's a killer. Right? I think as traders we do have to be competitive, right, Dakota? But how do you deal with that competitive nature in trading?
That's a. I shared a speech. Did you get to
I did watch
that,
that.
Coach Jay?
I did watch that. Yeah. Yep.
What's your thought on that speech? It's, if you guys didn't know it, it's David Foster Wallace's. He had a commencement speech, and it was such a great speech. If you've watched it, if not, I posted it on Twitter, on X, and it's 22 minutes long, and it really helped me put that different perspective. Like, you're driving on the highway and you get behind a slow driver, and you get pissed off at that slow driver, but you don't really know why. Obviously, you jump to the conclusion that this guy's an idiot driver, and then you pass them. It's like, oh, actually, they're coming from the hospital and they have a newborn, and they're driving slow for a reason, right?
Right.
So I try and do it. Like, we never know what the reason is behind why somebody does something, and it's a different perspective. I look at something and I see this. Somebody else looks at something and they see that. I don't know. But when it comes to my anger, when I do get angry at myself or get angry at my own trading or a mistake that I made, I go boxing. I take it out on the heavy bag. That's where I let my anger out.
Good stuff. For me, I go get a workout in, go lift some weights, go outside, just do anything to kind of forget about the charts. And it, like you said, you're competitive, but the one thing that's a little bit different with having that competitive nature in the markets, if I'm competitive and I'm a basketball player, I can kind of impose my will on the game to force it to go the way that I want, and I still may not get the results that I'm looking for. In the markets, I cannot force these markets to do anything. So you really have to accept that, like, hey, I'm a really small fish in this overall market, and I don't control it. Right, my job is to be a follower of where the market goes, based on a game plan, because I cannot control it. Right, that competitive nature, I think, almost does a disservice sometimes, because we're used to being able to control outcomes. The only thing you can control with your trading is the downside. So you're really competing with yourself.
Yeah, you can control where you get in and when you get out, but you can't control where you get out.
Right.
Yeah, you can't. So much stuff is just out of our control, right? We can only control what we can.
Andrew's hilarious.
I seen Andrew's getting too old, yelling at the kids outside. Grumpy Grandpa, just passed your first combine. What happens next? Well, you should be getting an email when you pass your combine. The following, if you pass tonight, for whatever reason you're trading these crazy markets, then tomorrow after the close, you should get an email with giving those instructions.
And just a reminder, because I'm seeing the comments in the chat again, if you're trading the equity markets and it's nearing 5% down, you do not want to be in a trade with the TopStep account.
Oh, look at Shep's new hip. Yes, man, you've been around for a while. I like that. I'm correct. Money is a tool. Just like a construction worker uses a shovel, just like a carpenter uses a hammer and nails, we're traders. We use money as a tool to do our job. And we can't be connected emotionally to money, right? So that's the emotional connection, the way that we are connected to money. Since we're babies, since we're kids, right? We know that money is what we use to get the things that we want. Coach Jay, that's 5% down sentiment. Why should we not be in a trade if market goes down 5%? Were we ever 5% or more down once overnight opens? Yeah, during COVID we were down a lot. Tonight we're not. We're down, what, 3.7%. The Nasdaq, yes, not the Nasdaq. The Nikkei. The Nikkei was so volatile. The Nikkei was within those limits. If we look at my chart, look at the Nikkei from high to low, 8.36%. 8.36%. Currently we're down 3.74%, and that is after we rallied over 4%. I don't know the exact settlement price, but as you can imagine, if we go down, we're at 3.7. So if we went down another 1.125, so we're really close in the Nikkei. I just wouldn't recommend trading if you're uncertain. If you don't know, then the best thing is to either just go to the support. You can hop into TopStep's Discord. We have some great moderators and some great support in Discord. If you don't know, best to not trade. Dying voice, dude. Yeah, it's best to not trade this price action. Unless you feel very confident, you understand everything that's going on, and then you trade smaller size. Anyone thinking we'll be limit down at the open is wrong. We'll either make a triple bottom or rally all night and tomorrow morning to fill the gap. You never know, JJ. You just never know. Dakota, you have your Series 3? Yeah, I have my Series 3. I also have my Series 30. Yep, Trader Mike. What do we do, Coach Jay? What do we do?
I'm just scanning around, seeing what's going on. The market seemed to kind of have settled down a little bit. The spread in the Nasdaq is not as wide as it was before. It's 8 ticks now, 2 points. But yeah, still really no trading opportunities. I think the New York session is going to be very interesting. We do have 76 contracts sitting on the bid at 19,000 evens in the Nasdaq. I'm just holding price up there. But yeah, not really much to do as far as opportunity. I think we answer questions, see if there's any more volatility. I think the financial world in general is just maybe taking a deep breath right now and settling down. Is the Nikkei still rallying?
Yeah, I was watching the Nikkei. We're kind of just doing exactly like the Nasdaq. We had a nice little rally off the lows, and we're kind of just consolidating. Maybe there's going to be a period of, like, usually some digestion, consolidation, and London's going to be crazy. Like I said, I think the biggest part right now in the next couple of weeks, I think there's a lot of people going to be waiting to see what these other countries do regarding tariffs. I mean, we made a big move. We made a big move after hours in both directions. We hit 20,000 in the Nasdaq. We're up what, almost 2-3% in the Nasdaq, and then just completely sold off. And this is the daily chart. If we zoom in back to the 5-minute, like this is.
I think you're on my screen, but I was sharing the tariffs.
Oh yeah, no, good. Yeah, that's interesting. Yeah, this is the board he was holding up, right, during his yeah, yeah.
Showing off his book report. But yeah, these are the numbers we had here.
Yeah, I mean, when you compare them, they don't look as bad, right? But some of these were zero, correct?
Yeah.
I believe some of these were zero. So yes, when you look at it like this and you compare it like this, it does not look bad at all. You're like, okay, that makes sense. You're like, oh wow, they're putting tariffs on us for 97%. We're only doing it for 49% in this. But you have to realize, going from 0 to 26% is huge, right? Like, that's big. That's very, very big. And then doing it to so many different countries. And I think what caught these markets off guard was, I don't think it was so big on some of these, and I don't think it was. Are these just general? Are these general? I haven't done a lot of research, but are these general, like on all products?
I think so. And I think the all products was like a 10%. If I'm remembering correctly, it was like 10% on like everything. And then,
is Mexico on there?
Mexico's not on here. Canada's not on here either.
So here's something that a lot of people don't talk about. You guys are gonna only get this here. I'm not under NDA when I talk about this stuff, so I don't mind talking about this stuff.
Here we go.
Here we go. Yeah, I mean, it's if you guys want to know, I'll just take 2 minutes. So the U.S., Canada, and Mexico they have a free trade agreement, right, where you don't pay duties. So what a lot of companies were doing is they would import a lot of the materials into Mexico. Yeah, Dick knows NAFTA, right? NAFTA, yep, exactly, yes. So would import a lot of these components, we'll call it components, into Mexico, reassemble it, and it's now made in Mexico. Even though we have this part from China, this part from Vietnam, this part from another country, we ship them all into Mexico, form a finished good, and then we'll ship them into the U.S. And save a ton in tariffs. So I think, like I said, it's going to be very, very important how these other countries react to this. Like, what are they going to do? Like, for example, Chile. Why don't we just put it at 0 for both? Right? Like, why 10% both ways? I mean,
Australia the same way.
Yeah, like, it's going to be interesting to see what these other countries do and react to this. And I think that's what's bringing a lot of questions into this market. There will be loopholes. Yeah, there's always loopholes. Trust me, it's a big game. If you ever seen a tariff book, it's just freaking huge. I mean, people get master's degree in import, export, and tariff codes. Tariff codes are you'll never understand them. It's a big game. What about the price of eggs? He said it's a minimum cross-border. Everyone taking advantage of the U.S. 10% is not the same. Yes, we're just posting general statements. Oh, let's see what this is. Oh, there we go. Yeah, hey, I'm cautious when clicking links anymore. Yeah. Yeah, there's the United States, Mexico, Canada agreement. Yep, Coach Jay.
You got my screen up still if you want.
Yeah, I know. I'm not showing it. I'm just saying Coach Jay in that link. I've went through this. I almost had to go to court once to get approval on made in America versus manufactured in Mexico versus assembled. I guess wording is very important, Coach Jay. Made in, assembled, manufactured, filled. You're filling bottles of vial like of a fragrance. Like, all these little details can make a difference on 10%, 20%. And there's so much of the details that I think people are waiting for as well on how these tariffs will come into effect.
Starting to trade into the gap in the Nasdaq. This price gap that we have. Remember, I'm kind of looking at 2 different gaps. We have this price one from the official close, and then we have the settlement gap, which is much higher. We're trading into it now. 1920 is the low, 19152 up at the highs here.
Yeah, I mean, Nasdaq has that gap. That it's not filled. You're at 50%, right?
Yeah, we're right at 50%. Yep, we just kind of rejected right at 50%.
We touched the low of after hours, right before we closed and after we opened. We touched right at 077, 078, that resistance zone.
Yep.
The candle. Yep.
Yeah, this low here. Yeah, rejected right at it.
According to my local news tonight, the price of eggs have started coming down. NQ is in a little on the DOM. It's nothing I'd want to. Yeah, NQ is looking a little bit better. And if I'm looking at the depth of market.
Let's see, this is just a TV combine here. If I market order, I'm down almost $35 right away.
Here, let's see it. Show everybody in the back. Good demonstration. It's just a practice.
Market. Actually, it's as soon as the market moves, I'm down 50 bucks. 50. Yeah, not worth it.
Yeah, 3 or 4 points instantly. Coach Jay, can you explain trading within 2% price limit? So I know there's going to be traders coming and going, and so let's reiterate it one time now, and then we'll reiterate it one more time before we end. But it is pinned to the top of the YouTube chat. Thanks, Coach Robert. If you've missed it, traders here should not be trading within 2% of the price limits. For example, if the Nasdaq goes down 5%, you should not be trading because max, the limit is 7%, 2%, 7, right, 5%. You can see it. There's a help article in the YouTube chat. Let me click on it and we can just bring it up. I'll bring it up. Let's go over it for a moment because it's very important. Briefly, go over, you can click that link, you can watch this video, you can go through and read this. It's very important if you have that question. It's really bright on my eyes.
It's white screen.
Yeah, okay, all right, we're taking that. Oh, okay, but there it is.
And this price is
looking a little bit better. And if I'm looking at, he said it's a minimum cross border, everyone's on a place to trade. If you forget or if by just don't have a position, I mean, there's nothing to get upset about, right? I mean, it's like somebody knowing that a news event's coming out and you hold a position into it and it goes against you and you lose money, then you get upset because you lost money, right? Like that's the reality of trading. I mean, it's good risk management, even if it's in your personal account. I mean, you just seen Coach Robert was caught in a limit down, limit up. It's just very wise not to be trading during insane volatility as a day trader. Now, I swing options, right? I swing options. I've been caught into it, but that's longer term perspective. Opening up your own personal brokerage account, that's obviously different. You can do what you want on your personal brokerage account. I've done that. I've ran into bad positions. I've been in bad situations in my personal brokerage account as well. I listened to your advice. I have a 5DK XFA on about 3.4. Just taking base hits. Great trade. Great work. Great work, Coach J. Can you still trade the Nikkei? You can, as long as we are not within the limits. So once again, click that link. You can still trade any markets that are not within limits. Markets are open right now. Size down. Do I trade Dakota trading naked options? Hey, all my options are covered. No naked, nothing naked. The only thing I do naked is we're not gonna go there.
And if the article doesn't make sense, put it in ChatGPT and ask it to explain it to you.
Yeah, or TopStep's Discord as well if you need. Yeah. Oh man, I always yeah. You talking about covered calls? Yeah, covered calls, cash secured puts. Man, talk about it. Tomorrow, does it close lens? Chat's on one tonight, man. Chat. I'm not seeing anything that's even remotely tempting.
Not even close.
I'm not even looking at trades, to be honest. I'm just thinking, you know what, to be honest, going into tomorrow, I am on fast markets tomorrow morning, everybody. And I think for me, it's just, let's just see what happens. I mean, there's going to be a lot that happens between tonight and tomorrow. And whether we're up or down, what would be your game plan for tomorrow? Just wait and see? Do you even have any ones?
For me, it's a wait and see for sure. There's definitely going to be some volatility. I want to see how the market responds when we get most of the volume for the day, and then we'll make some decisions from there. But I'm not super eager to just jump into a position either.
Oh wow. Kevin Gators. MP just tweeted, someone took out almost a $500,000 payout. Uh-oh. Is that who I think it is? Is that who it is? I'm going to show this. I'm going to show this one. Yeah, this is a positive. Let me switch it to my charts. Big shout out. MP coming in. I'm going to zoom in on that one. That's some positivity. While we're watching this market, when you earn it, we pay it. We need to now see the life accounts going up. Okay, going through that. But big shout out to you, KJ. Largest ever at TopStep live payout. 456,000. The biggest, the largest. Love it. Love to see it. I was that for a little bit, but here we are. My biggest one was 225, something like that. But beautiful. Wow. April 2nd. What a day to get that payout too. That's got to feel good.
That is amazing.
Wow. Big shout out to you. That deserves
We've been
celebration.
seeing KJ kind of post some P&L posts every day. I think he was in that live account for about 45 days or so. And I think started off struggling a little bit in the beginning, had some losing days, then turned it around and clearly traded really
Order
well.
filled.
Yeah,
Congrats.
that's big. That's awesome to see. Trading in the live account doing well, and then being able to take a payout like that. I mean, there's nothing like it. That's beautiful to see. Dude, KJ got liberated. Man, he's a happy person today. That's for sure. That is for sure. Wow. Was he still limited to 15 contracts? I'm not sure. Once you're in a live account, you actually could work with the risk managers, and you could trade. I mean, the sky's the limit, right? I mean, I wouldn't be surprised to see him trading 50 contracts, 20 contracts. You're not limited once you get to a live account. Once you get to a live account, you can work with the risk management team, and they can open you up. I had access to like 40 contracts, $15,000 day loss limit. It's flexibility. You earn that. You show consistency. You trade well, and the sky's the limit.
Somebody said the Nikkei is only down 3.9% traded.
It's just hearing all these rules is daunting. I missed 2024 stocks. What rules would be daunting? These limit rules have always been there.
They've been there.
We haven't had to really talk about these limit rules very often, and it's regular, right? It's like there's something there, and you don't know it's there until it gets talked about it.
Yep, that rule has been here. I've been with TopStep for 2 years. That's been there as long as I know, and I think even longer. So not a change. Like Coach said, we just don't talk about it often because it doesn't happen often.
Yeah, and then there's standard rules. Yeah, there's standard rules. I mean, you even said today, Coach Jay, everyone with a brokerage account got email saying that their margin was increased, which means, if you're trading $10,000 with a margin, you now only have access to half of that. And nobody knows that because it's like, oh, well, where did that come from? How did you know? You're not going to call your broker and say, yeah, what the heck, man, you suck. Why didn't you tell me? It's across the board. It's across the board.
Also, you are not restricted from trading right now, right? That price is 18,770. That is almost 300 points away. You can take all the trades you want between here and 300 points lower if we get there. Just once we get there, don't trade. So if that's restrictive, I don't know what to tell you.
Yeah. We're just not. Coach Jay and I were choosing not to trade in this volatility and this the spread that we're seeing. These markets are open. You can trade them right now, but it's very important to understand what that rule is. It really is. We just seen the Nikkei hit it, right? I'm going to switch over to the Nikkei, and yeah, look how insane volatile the Nikkei is from top to bottom. Like I said, top to bottom, the Nikkei was down over 8.5%, 8%. We did hit that rule. The Nikkei was down almost 7% from settlement. Right now we're sitting almost minus 4%, and that's already after it's rallied, 3.5. So Nikkei was down 7% at one point. This is very, very volatile. It can be scary. It's very scary. I posted about that, and we talked about it, Coach Jay, about 300 contracts coming in at the bid on Nikkei. That's something I've never seen before. Trading the Nikkei. I was joking. Maybe it's maybe it's Japan coming in and holding up the futures. Someone placing a really big
You said it
order.
got filled, right?
I didn't see it get filled or not. I was.
Remember what price they were?
It was 34,000. Oh, what was it?
Was it evens?
Let me see.
It definitely got filled.
Let me see. I'm looking to find out what price I did it. It is 34,200. 34,200. Their plunge protection team.
Guys, if you're looking for the ES level, I think I put it in the chat recently, but again, settlement times 0.95. You can probably find it faster than I could type it, but settlement times 0.95. But yeah, those contracts definitely did get filled, Dakota.
They did?
Here, let me see if I can pull this chart over there. I have it up on Quant Tower to see that data.
It's $25 per tick per contract in the Nikkei, so it could get pretty crazy. I wouldn't trade. Swings are way too big, and 20-point stop loss will get ran straight through on pullbacks and slippage, right? And slippage. Not only do we see this high and extreme volatility, you put a trade on, and if it moves really quick, I mean, look at the DOM in the Nasdaq. Coach Jay and I have been talking about this all night. Look at that. If we move very fast, there's slippage. You get in, get out. I mean, that's 2-3 points, and it's changing very, very fast. Even though you can trade, doesn't mean you should.
I'm pulling up a different chart over here, but I'll let you know when I have it up so we can take a look at how those got filled.
Yeah, no problem. There's MP in the chat. Giving shout outs to that almost $500,000 payout to KJ. Hopefully we're going to shout him out again tomorrow morning. What about to account if you violate? What happens? I believe you just get a warning. Like I said, TopStep does have risk managers watching, paying attention. And $500,000. Yeah, rewatch it. I pulled him up. Traders were mentioning over there in the Twitterverse, largest TopStep TV payout ever. TopStep. MP is the reason why.
Can you explain slippage?
Yes. Okay. Let's talk about it. Slippage. Oh, it's a 4-letter word. It's a cuss word sometimes, to be honest. Let's say when the floor is wet. Oh yeah. Yep. There it is. That's what we were talking about. This that post MP. I pulled it up on stream, and man, beautiful. 410K. So what slippage is, everybody? It's when you're trying to get in or out of the market, and you get a different price than what your order was. So it doesn't happen on the limit orders, right? If I want to sell limit at 34, this is just a practice, so I'm going to show you. So if I want to sell limit at this price of 34,980, well, I'm going to get 34,900, whatever this price is, 970. Right now it's 970. That's a limit order. However, if it's a stop order, let's just say it's a buy stop, that just means I want to get in. It turns into a market order. So as soon as price touches 34,960, it's going to give me the next available price. Now that price might be higher, it might be lower. Most of the time, if the market's moving very fast, it's going to be higher. So even though I put stop market buy at 34,960, if this market's moving very fast, I might be getting, 975, 980, and that's during a very volatile market. So I'm not going to be getting the price I want. It's the same as if you're in a position and you try and get out at market. It's the same thing. You're probably going to be getting a different price during high volatile times. We're looking at this on the Nasdaq, and you can see this DOM, try and get into a market order, and you can imagine, oh, well, maybe I wanted to get this or that, or a stop loss order, right? So you have a stop loss turns into a market order once it's touched, and you get the next available price. Well, if the next available price isn't until like 5 points, 10 points below your stop loss, even though your stop loss is set for you to lose, say, $500, you might end up with a $600 loss because this market's moving so fast and there's not enough liquidity there for you. On any order, Alan, that's the definition of a stop loss. You have a stop loss. A stop loss turns into a market order. There's no stop, and it depends on what you're referring to as stops. There's a stop limit order to get you in and can get you out, but those don't guarantee a fill. It's a stop market order. A stop loss is referring to a stop market, meaning once it goes against you to a certain point, it will close your trade out at market, not limit. No, because sometimes it will not fill. Limit orders do not always fill if that price is touched. There has been times. Well, it skipped it. I've seen limit orders get skipped. Very, very rarely. Yeah, slippage is setting a small stop before the Liberation Day speech and getting filled 100 points below.
So I forgot. I didn't see who said it in the chat. Oh, Vasco Broma says, slippage is when you click buy and the market here surprise me.
It's like, what do you want for dinner, honey? Surprise me. Oh. Tech, it's crazy how knowledgeable. I mean, this is what I've been in this market since I was a kid. It's a lot. It's a lot. Got my Series 3, got my Series 30. Been trading for a very long time.
So Dakota, if you can pull up my charts real quick, we can see how those Nikkei orders got filled.
Okay,
you guys see this? I don't know if it's clear at all, but Dakota was saying we had about 300 lots sitting at 34,200 in the Nikkei, and it didn't all get filled at one time, right? And you said it, Dakota, right? It came down and kind of tested that order a couple times. These are all 3-minute candles. These are what are called cluster charts. There's a bunch of different platforms that have this. This is just Quant Tower showing it. So we came down, traded 53 of those contracts at that price, bounced from there, traded another 14 of those contracts at that price, bounced again, and then traded 18, and then just sold all the way through it. And then in this 3-minute candle, we had about 400 contracts trade out. So it looks like they took that order in pieces, and then whatever was left here kind of just sold right through it.
Yeah, that's when it just tanked. It just
just tanked from there.
And now we recovered. Nasdaq is, I mean, we're up above 19,080s. I'm curious to see if we fill this gap. The gap fill in the Nasdaq is 151. So yeah, and those orders getting filled. Those are big orders too on the Nikkei. So we still have 60 points to go. 60 plus points to go. to fill the gap from just the night. This almost feels like a Sunday night gap, and it's not even non-farm. Non-farm is yet to come. Dakota, you've been trading since you were in diapers, according to what you suggested. I've been trading since I can remember. I remember my first experience with trading too. I thought I had it all figured out with candlestick patterns. I memorized them all. Memorized them all. I have been watching the market. So here's an interesting story. My mom was addicted to fast markets. No, Mad Money. Mad Money with Jim Cramer. Yeah, when
I just watch that all the
when
time.
it first came out, I was like 12, 13 at a time in junior high, and I would watch it, and I would try and figure out and memorize chart patterns. I think I was going to become super rich, memorizing chart patterns, thinking I knew everything. And yeah, that's where the addiction began for me. I was hooked. I got signed on to old Scott Trades account as soon as I turned 14, and yeah, that's been it. Look at this market bouncing now. That was a 40-point bounce here in the Nasdaq.
Filling that gap. Now traders, you don't have to worry as much about that 5% level because we're moving in the opposite direction of it.
Oh yeah. Hey, who's trading tonight? Who's trading tonight in the chat? Can we do a poll? Why do I count the gap from 151 instead of 100? Because that's the close of this candle. That's the close of this candle. So I consider the gap at 151, 152. Me. Robert can do the poll. Are you trading? Yes or no? I am. Micros. I'm 5-0 tonight in a combine. I'm
Nice.
long. Never again. Only New York, London session going forward. That's also a great choice. I caught the whole move. Okay, fire drill. Okay, I'm in it to win it in my CFD. Can we trade now? You can trade now. Yeah, you can. But like I said, it's understanding what the risks are, managing your risk, understanding volatility, size down, trade micros. I locked myself out until tomorrow. I'm not going to be trading until 30 minutes after the New York session open, so that way I can at least see what the market's going to do. Give the markets time to digest everything that's going on. Let the London session open. Let the New York session open for 30 minutes, and then start watching the market. So I'm going to vote not me.
Yep, I'm voting not me as well. Dakota, if you can pull up my charts real quick one more time.
Yeah.
Something we talked about during At the Buzzer, the highest volume on that sell-off that we had during the tariff announcements, the 3-minute range is 19,356 down to 19,117. I anchored a VWAP there, and we started to hold above that VWAP, and we talked about it during At the Buzzer. Does the market trade back through this imbalance, or does it leave it there? Right, so that's kind of what we're testing right now, 19,115 at the low. We can see that VWAP is still below it right now. If we start to accept above 19,115, then looking for market to rotate up to 235. But if we reject here and get back under this VWAP, then looking for it to continue to sell, we can see once we got above it, it starts to act as a support. And buying coming in here, but major level, they got to get through up here.
Man, this market, there's a lot of orders going through this market, man. A lot of orders going through. I'm watching. There's the tilt. There's the tilt. I'm watching this tilt over here. 53% long, 47% short. This is the scary thing, everybody. This is the scary thing. 47% short. The average short price 19,040. That's over 60 points lower. So are the shorts just holding? The average long is paying out pretty good. But I'm seeing these big contracts coming through now, Coach Jay. There's 100 contracts sitting out the bid. Will they get filled? And I've seen a few bigger orders come through. Where there's, moments ago, it got filled. There we go. There's big size coming through right now. 57 got filled. Big money coming in and out of these markets.
That's crazy.
Usually we'd see those big orders just they disappear right before they get there.
Yep.
Zero, what are you referring to?
I don't know.
They're moving stop losses up over. Hold on to your butts during this. Love it. Man, these markets. Tomorrow is not going to be slow for sure. Tonight hasn't been slow as well. What's your best risk management advice on a 50K account? Use micros, please. Trade coal. Last time I watched coal prices is at the coal mine. Good old Bob Murray from Murray Energy, if you know what I'm referring to. Talk about the price of coal on a daily freaking basis. Powell will be buying the markets tomorrow. MES. Trade MES. The PA feels like election night. Kind of does. Just erased huge moves from last night. How far off are we from the lows? We're 300 points off the lows almost. 300 points.
Yep, about 300 points.
Sometimes you get too ugly via comments. That's okay. It's those what do we want to those intrusive thoughts. We all intrusive thoughts. Letting those intrusive. They're winning. Poll done. Okay, 52% of traders are trading tonight here in the chat, or at least who voted. 47% not trading. Now the question is how much do you want to believe them? All I know is I look at this tilt, and yes, traders are trading tonight.
Somebody's trading.
The average short is 19,040. You're in the underwater. It's crazy. They're bored. Don't risk what you can't lose.
I did throw on a short on this coaching combine, but I would not suggest anybody trading this in account that matters. This account cannot get funded. But I put it on at that level, right at the low of that candle we were talking about.
Surprised I'm not trading. I'm locked out, man. I'm not going to trade this insanity price action. I was giving credit where credit was due. Giving credit out to KJ, who took out that $240,000 or 200 or 400. What am I talking 200? $410,000 worth of a payout. Made a nice comment. Yes, I am on Twitter. I watch. I pay attention. I don't have like the jab or hashtag, but I watch. I want to give more credit whenever I see things like that. Give shout outs. Give any of that because that deserves it. When traders are able to take that kind of money out of this market, it's a beautiful thing. I mean, That's what you want to see from a prop firm, especially from anyone. It's like you crest 410,000, paid. Right? No issues, no questions. I mean, it's nice to be able to request money from your broker, your prop firm, and not have to pray, not have to guess and hope. 40 points in 1 minute candles at 10 p.m. I know. These are small markets.
Are we gonna stay another hour if we get 1,000 likes? Probably not.
No, Jay. No, we are almost done with tonight's session already. We are almost done. I pulled a double shift last night. You know it, Jay. I was in a position, and the chat had me stay a little bit after. But any last words? Any last words, Coach Jay, before we end the session and leave everybody off into these markets? Andrew says no. Robert needs a nap before D stream.
This is history in the making. Trade well, manage your risk. Don't try to force opportunities. The market's going to present them to you. And if you are just kind of getting accustomed to trading environments like this, maybe watch, right? Get some good screen time in. Maybe put some practice trades on. If you've never traded this environment, don't come in with the expectation of having to make money from it. Trading, markets will go back to normal eventually. So manage your risk.
Yep, don't trade. Just because you can does not mean you have to. So size down, understand that. We've provided all the links. If you have questions, go into the TopSteps website. You can take a look there in the support. If not, you can always hop into TopSteps Discord, ask questions there. It's always better to be safe, not to risk it. Manage risk. I can't iterate that enough. TopStep team is definitely keeping its eyes on the markets. Like I said, I talked to the risk managers. Same thing. The number one goal for all traders here should be managing risk in these markets. You can always trade tomorrow, always. And if you can't, we have bigger problems, right? There's Andrew in the chat. Let's go. I'll be on for TopStep TV, fast markets tomorrow morning. And then, of course, D for the London session. She's in for a wild one. That is for sure. So take care and see you then. Not yet.
We're still here.
With it, you still hear us.
I was talking to our good friend Angeline this morning in London.
Okay. What the unintentional consequence of what's happened with everything that's going on in the U.S. right now in this whole isolationist policy, this whole tariff policy. What's actually going on is we're providing an opening that didn't exist before. Europe was shut out for all intents and purposes. Europe was completely shut out. The door was closed. And I know
you're saying whether it's for listings or whether it's just for any first prioritization. It was always a second option or a non-option.
Of course, yeah, it was definitely a second option, a long distance second option. Distant. And I think what just happened is, and this didn't apply just to listed, it didn't apply just for market structure. It also applied for things like capital financing of different things. It could be financing of
raising money for a new company or a new project, just raising money. Here.
Well, when you think about it, it's defense, it's space, it's communications, it's basically finance. It's anything you can get your hands on. There's always been this dependence on the U.S. and this reluctance to do anything domestically because you can't compete with the scale and you can't compete with the ability to.
Well, the Milan Stock Exchange is a classic example. Just to use a familiar reference.
Every stock exchange
so shallow but so thin. Yeah. You know why? What are you talking about? Frankfurt so thin, so shallow. Like what are we doing? Paris, come on.
The London Stock Exchange is a ghost town. And so after being listed in London now, for 4 years and watching what happens over there, the amount of interest and how people buy equities and how they think about investing, it's a horrible place to be. The flip side of that is something for the rest of the world the rest of the world just got a wake up call and they got slapped. They've been stepped on for so long that they just got a slap in the face. They woke up and all of a sudden they're like, you know what? We can do this. F you guys. We can do this.
There's more of us than there are of you, basically, whether it's the Chinese or the Japanese.
More of them. There is more of them. And when you look at different places, talk about, look what we did for Mexico. Claudia Sheinbaum went from being, kind of not a very popular political figure to being one of the most powerful women in the world. The new is the prime minister in Canada because it's a parliamentary system.
Oh, Mark Carney.
Yeah, Mark Carney. He's probably the most popular of anybody there ever already because
just because he said "F you," I got this.
Just right, exactly. Hey, we've got there's other vehicles, and so and everybody in Europe has kind of taken that approach, and they went from having no leverage. I think the miscalculation that the Trump administration made, and it truly is a miscalculation, is that they had all the leverage. And
America has all the economic leverage, full stop.
We had
whether it's as a market, capital markets, consumer markets, any market.
We had all the leverage. We had leverage every which way. We have all the money. We had all the leverage. what the miscalculation and the mistake that this administration made, and anybody can yak about, we didn't make a mistake, or this is just the beginning, and 3 years from now you'll get paid, whatever. I don't care. The mistake, everybody, they emboldened everybody. They gave everybody the power back. They lost all the leverage, and now it's just a game. Now everybody's going to negotiate, and in the end, they're going to say, okay, you remove this tariff, remove this tariff, blah 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 blah. But it doesn't matter because they've empowered everybody.
Because they've awoken the beast, whether it's the German, French, British alliance, or whether it's the Korean, Japanese, Chinese alliance, or whether it's the Mexico, Canada, England alliance, or the Italian, whatever. Like everybody's active now. They've created a dynamic, non-U.S. economic world.
That's right, and they've essentially said, if you look at the way the money is flowing right now, the money flow now is out of is out of U.S., is out of kind of some traditional products, and into like, listen, we'll do this ourselves. I mean, we can do this ourselves.
So to that,
go ahead.
So to that end, there's been discussion. I mean, because it's sort of interesting, it's fascinating to watch it every day, right? Like again, I'm really fascinated because when was the last time Japan, China, and Korea were aligned? I don't know if it's ever happened.
I don't know if it's ever happened.
Because they're mortal enemies, or at least rivals. I won't say mortal enemies, but certainly not friends. And you see the same thing in Europe, whether it's again the Germans and the French, and then the Germans and the French plus the British, and anyway. The incremental sort of advancement of the awakening of the beast and the kicking off of the cobwebs, and basically just dealing with the hassle of like, well, which language are we going to use and which regulatory regime? Like everybody's kind of avoided it. They're like, no, we're going to be French and you're going to be German, and we'll just all work in New York and Chicago. And now it's like, well, hang on, we're not going to work in New York and Chicago. We're going to work in Europe. So we better figure out a language, which will be English, obviously, for everybody, for contract law. And we got to figure out a regulatory regime. Do you actually believe that there's a possibility of a deeper, more relevant, more active capital market in Europe as a result of this?
No, I don't believe that there is right now. But what I do believe is that the momentum has shifted. And what I know for a fact, the momentum has shifted. And I know for a fact right now, for the first time in 4 years, since we've been part of a UK company, for the first time, there's actually interest, not because our business changed overnight, because it hasn't, but simply because there's a money flow that's going in a different direction. Like they reverse direction on the money flow, and the money flow is now going into a lot of the European markets. And
there's a natural bid for IG Group, or for that matter, UBS,
there's a natural bid for everything. It doesn't matter.
Daimler-Benz, or Volkswagen, or Fiat, or.
There's an appreciation for a different marketplace for the first time. And what you're seeing is some of the money flow out, and not even reluctantly. You're seeing some of the money, just like you're seeing a huge sector rotation take place right in front of our eyes, and it's self-inflicted. Now you can go back, and you can go back just 3 or 4 years, and you can play the tape, and you can watch what China did. And it's so similar and so scary.
In terms of the self-inflicted damage from when China went full crazy pants.
Yep, exactly. And it's the concept of self-inflicted disruption. You got to remember that disruption is something that big corporations need to do to stay relevant, because they have to stay at the forefront of their technology, and they have to stay at the forefront of innovation, and they have to stay at the forefront of buying other businesses, so they can stay out in front of everybody. Governments are not the same thing. Economies are not necessarily the same thing. You can't disrupt an economy like you can disrupt a corporation. And so China learned the hard way. They basically stifled their tech companies and learned the hard way how that destroyed their real estate market, their economy, everything else. I'm nervous that this current administration took a page out of that playbook under the guise of, we're getting rid of all the bloat and all the inefficiencies. So what we're doing is we're cleaning up the inefficiencies, like we're laying off, like a corporation would come in and lay off 10% of the workforce in an effort to,
But it's like sort of the style where it's like everybody with an even numbered social security number, like sort of the randomized madness.
Well, it works on a corporate level because you get your expense ratio way down, and you clean up your balance sheet, and then you attract investors. It doesn't work the same way for countries and for governments, because it's just not the same thing. And you can't run a government like you run a business. And you would love business people to be involved in government, but you can't run it the same way. So the approach here of just slice everything off and then try to rebuild, what it does is it sets you behind. I mean, I don't understand why we couldn't look at the Chinese model and see, I can't believe we couldn't look at like how disastrous the Russian model was, but that market was so thin to start with. The Chinese market wasn't that thin. You got to be careful when you go with full-scale disruption. And again, why? Why? The argument that you're just trying to lower the cost of your future debt, I don't buy it. It doesn't work that way. And so this is the problem, that we've kind of made our own problem. We went from having no real issues to having big problems because we've emboldened the rest of the world. And I don't know what that ultimately means, but we've lost the leverage.
Is there a point? Is a leverage? I mean, this is going to be impossible. I'm trying to ask this question in a way that is answerable. Where has the leverage most clearly shifted in Europe? Obviously, it's sort of diaspora. It's sort of the reason it's like not a great question, I guess, is because it sort of diffuses to the world. Is it in Canada? But is there a clear locus of power that's emerging relative to, in the sense of leverage, whether it's the coalition in Asia or a coalition in Europe, or it's too soon to know?
I think it's too soon to know. I don't know the answer to that. I think it's too soon to know. But leverage is really interesting. Leverage is something, we were negotiating a real estate deal for Tasty, and one of the things I pointed out to the other party was there was an article this week in Cranes, and it said Chicago commercial vacancies in the downtown area were at 11, where for 11 straight quarters have gone up. So it's a record amount of vacant space.
Inventory.
And the argument is, okay, that's great. That means leverage is in our favor. We're negotiating a deal.
You guys are trying to get in. You're trying to pick up some inventory. You're saying you're on the buy side.
Yeah, we're trying to pick up inventory, and and when you're trying to pick up inventory, when vacancies are at 11 straight down quarters, the leverage is in your favor. It's not rocket science. There's more sellers than buyers, and that's when you do your best work. And I'm fearful now that you got to the idea that you raise money when you can, not when you have to. And I feel like we've had such an easy go at raising capital in this country, and now it's going to be a harder go because the money's going to look elsewhere.
There's a you remind the leverage. My one quick leverage story I'll tell you is in the years when I was hosting Fast Money and I was living in lower Manhattan, and because Fast Money, I guess probably still is, but at that time the show we were doing was ending. It ended every day at 6 o'clock, and I would get home at 6 around dinner time. I would be walking home basically between 6:30 and 7. And one of the regulars in the neighborhood where I was living was a man named Harvey Keitel, who's a well-known actor.
Yeah, sure, I remember Harvey Keitel. Yeah,
right. And Harvey was actually a fan of it. Would watch the TV show. He was like, oh, but he was like, but he would have 2 cents. He obviously wouldn't watch every day, but he watched it. And so we became like sidewalk friends in the New York sense of the word, like just a chat on the corner. And the show had become a big hit and whatever. And I had leverage in a contract negotiation basically with NBC. And Harvey knew that I told him the deal's like, he's going to stay. I'm like, oh, the deal's up. We'll see, whatever. I was young. I was like 33 or 4, something like that. And Harvey pulls me aside on the corner and like in his full like character, And he's like, remember, kid, he's like, when you've got him by the balls, squeeze gently. And I always thought that was very good advice. And I think that that's something that Trump has not done here. Like Trump basically felt like America has the world by the balls, which is true, as a capital market, as a consumer market, as a reserve currency. And he would have been much better served to take Mr. Keitel's advice to squeeze gently in the negotiations, as opposed to this insanity where he's basically just horrified everybody to run away as far as they can, as fast as they can, anywhere they can.
No question. You're 100% spot on. But Trump's MO is his strength is in sales.
Okay.
People get confused because his strongest attribute is that, he can sell anything to anybody, and he's obviously done that. He's been president twice.
He sold the world that he should be the president.
Of course.
And so not the world, the American voter.
He could teach a master class in sales. That's the upside of Trump, is that he's a good salesman. The downside is he's a horrible business person, and he doesn't understand it and doesn't want to understand it. He doesn't spend the time to understand it, and he's dangerous in that capacity. So, that's where
he doesn't know how to use leverage to get what he wants because he overestimates his position, basically, or he doesn't know how to manage his position, whatever that means.
He's just a bad business person. That's why he's so many bankruptcies. But he's the other side to him. He's a great salesman, so he keeps raising money. And that's a skill. There's an art to being a great salesman, and and nobody can take that away from him because he's effectively done that.
So let's say that the yard is now open for the Germans, for the French, for the Italians, obviously for the British, for the Chinese, for the Japanese, for the Mexicans, for the Canadians, whatever. Let's say 10 to 15 economies of some consequence in Asia, North America. Would you go so far as to, as American investors, which we both are, and most of the audience of this podcast, I believe, likely is it to the point where would you allocate either trading or investing activity? Are you inclined to follow the changing flows away from the United States in any way?
I don't.
Other than the fact that you're already naturally there because you sold your stock to a British.
I'm naturally there. But if I wasn't naturally there, my answer would be no. It's not an easy thing to do. For people that live in other places around the world, it's relatively easy to invest in the U.S. because almost every financial service company offers access to U.S. markets. There is no U.S. There's almost no, I shouldn't say there's no, but there's almost no U.S. financial service company that offers access to markets anywhere else. There used to be an E-Trade ad that ran, 25 years ago, and there'd be some, kids would clap because they'd be like, Daddy just made a trade in Japan. No, he didn't. That was all bull. They never offered Japanese stocks. One company that we compete with, Interactive Brokers, has a global network, but it's not black and white. You have to convert currency.
Order filled.
I'm a proponent of tokenization for the sole reason that I want to invest in other products and other markets, but I don't want to, I don't want to own different currencies all over the world. And because I think it gets a little bit confusing and it gets a little bit disorienting. And I also, you have to clear different places. There's just so much work involved in investing all over the world, and it's very difficult to do. And I give people that live other places a lot of credit for being able to trade U.S. markets.
Order filled.
They crave the liquidity that we have. It's not going to be good for U.S. investors to get into markets where we don't even understand how they work. Like, just to give you an example, Scott and I managed a fund once in Japan, and it took us like 2 years to figure out how to buy stocks there. Like a round lot in Japan for one stock could be 1 share, for another stock could be 10 shares, and for another stock could be 100 shares. And those are all round lots. And just figuring out how to access, the Japanese, the Nikkei, and how to trade in that marketplace, was an obstacle we couldn't overcome as professional traders. So it is not easy to do. And on top of
Order
that,
filled.
we're ethnocentric when it comes to currency. So most other places around the world know what their currency is to the U.S. dollar. But go ask any American on the street, nobody has any idea how currencies work.
Any of the world markets, do you think that any one of these countries is better positioned than any other to exploit the opportunity? London, because of the language, that would be the kind of obvious one, and because of the culture,
because of the hours and stuff.
London and the culture, and they have their audience. It's a Wall Street culture, and it's the language, and
yeah, but it's London. The problem in the UK is the problem in much of Europe. They're still, the investing and the strategic mentality there in the world of finance is still 20 years behind the US or 10 years behind the US. And so they have a lot of issues. They have know-how issues. They have cultural issues. They have just, their issues have issues. So I think it's going to be very difficult. I think they're about to get a huge influx of capital because, just like you said the keyword before, you said if you add it all together, they're bigger. They're bigger than us. And And so if you're talking about pure size, and there's a lot of wealth too. You're talking about size and wealth. Yeah, I mean, there is an incredible amount of potential there.
No, there's more people and more money.
Yeah.
It's just poorly organized and inefficient and compartmentalized and trapped in noble families and different languages and trusts in France and weirdness in Japan and whatever. And that's the sort of that was what I was thinking and listening to you is does the adversarialism of America finally incentivize basically tearing up these legal contracts in Japan and Italy and France and Germany to make things move around more efficiently? You think it does?
There's one of the things that's always held back the rest of the world is there's a lot of conflicts. And what I mean by conflicts is, people all over the world are really smart. And it doesn't take a genius to realize when the executive branch in whatever country you're in has conflicts with what they're allowed to do, how much they're allowed to take, what they're allowed to invest in, all that kind of stuff. When the executive branch has conflicts with the public marketplace has no integrity. The U.S. has always had this separation of politics and financial markets, or the executive branch and financial markets, and we've been very clear not to cross over that line until now. And so that line's been crossed, and now it gets murky and it's cloudy. And so that's what's at risk here is the integrity of the marketplace. How much are people going to be willing to? I mean, you see the blowback on Elon. Okay, you see the blowback there. World's richest person. He didn't need to do this. Now you see the blowback. And
he was a hero 5 or 10 years ago.
Sure.
Now he's a villain, right?
That's right. So why do this? Like, what was the point? And you're going to end up with the same. Well, I mean, it's easy to figure that out. But I'm just saying, now the conflicts are too great. Now you look at Elon. You say the first thing you say is, well, behind the guise of cutting, whatever they entitlements on down, you say, well, they replaced the communication system with Starlink. They replaced the space program with SpaceX.
Car tariffs benefit Tesla.
Car tariffs benefit Tesla. Potential military contracts benefit, for electric trucks and things like that benefit Tesla. So now you've got them, replacing, essentially. It just goes straight down the line.
It goes to the rotting of the integrity of the American system,
right.
which was the differentiating factor relative to Italy or Russia or France or anywhere where it's like, well, the rich families control the government and the rich families control the companies, and they take care of each other. I mean, it's taken for granted. It's not even a point of it's like, what are you going to do? And America was always not that. America was exactly the opposite of that. The reason America was aspirational. So I guess the next question is, let's assume that's obviously been impaired or destroyed or whatever. Do you think it's recoverable?
Sure. Everything's recoverable. I mean, America is, let's be fair about one thing. America's too big to fail. If you think JP Morgan's too big to fail, America's too big to fail in 100 different ways. I mean, China was too big to fail. India's too big to fail. Even Russia, which couldn't have been worse than they've been, is kind of too big to fail. So yeah, America's way too big to fail. There's not even a remote chance. So for America, it's just how bad is the damage before we figure everything out and everybody revolts, straightens everything out, says, hey, this is not cool anymore, which will happen. But no, America's way too big to fail.
I was talking to Josh, who's our producer, about this earlier, and it's like, on the one hand, how do I say this? On the one hand, once you expose yourself as a lunatic, it's not easy to just become trusted. Like if you don't have a great professional relationship for decades, which we have and we do, and then you or I, and if somebody displays some really hostile and bizarre behavior, it's hard to pretend that didn't happen and just continue.
Order
like
filled.
If you're in a romantic relationship and it's all good, and then somebody pulls out a knife in the kitchen and threatens to chop off your finger, it's not easy to go back the next day and be like, oh, well, never mind about the whole knife thing in the kitchen. It's fine, And I just wonder the degree to which, the American behavior makes it hard to go back to, they've already authorized a military. The drone army in Europe is underway, right, with the German debt cap waiver and all. There are structural restructuring actions that are now are underway that are not easily reversed, I guess, is my point. That there is a case to be made for a permanent degradation of the relative power of the United States. But for the fact, I think it's in everybody's interest for America to be fabulously productive and powerful. I think it's in Europe's interest, Asia's interest. Everybody wants a strong United States, I believe.
Years ago, I remember great sports teams like the 1985 Bears and the Bulls when they were in their heyday, Michael. And one of the things that great teams do is they never give the opponent a chance to come back. Like when you have your opponent down, you step on their neck. You help them up and then finish the job. And you
don't take Michael Jordan out of the game because he's
you just don't let him come back. The 85 Bears didn't let anybody come back. They just would pound you to the end of the game. The Bulls did the same thing. They would just beat the crap out of you to the end of the game because Michael was so competitive. The great teams do that in sports. And in the, when it comes to kind of the economy, it's a little bit the same thing. You're not going to step on everybody's throat because you need them as trading partners, but you don't give anybody the incentive. You don't give them the bulletin board material to come back at you. You don't let them all gang up against you.
Yeah, well, there's just no reason to activate everybody else in the world to try to figure out everything they can possibly do so that you can never screw them over like this ever again. I mean, basically, they're like, we need to make sure that we're never this vulnerable ever again, whether it's all these countries.
Yeah. So anyway, that's kind of like in a weird way, I feel like that's where we've ended up in the very short term. I don't know if we stay here. I don't know how bad or it gets or whatever it is. I assume it's going to be very, very cyclical from here on out. I assume that it's going to be, it's going to look great one day and horrible the next day, and that cycle is not going to change that much because that's what it kind of looks like right now. But I mean, listen, we've already done enough damage. I don't think we need to do any more.
Do you think that this is, as Chris Vecchio would say, that whatever happens with the tariff announcements later today is ultimately a risk clearing event in the sense that that it'll be viewed as, okay, well, now whatever it is, that's what now the uncertainty will be removed, whatever the numbers are? Or is that wishful thinking? Because
no, that's not wishful thinking. That's exactly what's going to happen. That's what always happens. In this case, it's a sell the rumor, buy the news. And so, because the worst of whatever has happened, the worst of it is already out. I can't believe, I know there's a big number on Friday and stuff like that, but as far as the whole tariff thing goes, today will be the end of the, this will be the absolute end of that whole, at least I think for the short term, this will be the end of it.
So from a trading perspective, does that give you, I haven't looked at the market since we've been talking, but I know there was more of a bid than not coming in here. Does it make you more optimistic as a trader coming off the back of this thing for those reasons?
Well, I think that the market's already ahead of that today. We were down when we opened this morning. We were down 60 handles, and the whole rest of the day we spent up, up 10, up 20, up 30. We got up 60. Sure. So there's been 120. There's been from 1% down to 1% up. So I think the market's already priced that in, and the market, the market woke up at some point late morning and just said, you know what, you're right. This thing is all going to be over today, one way or another, and I think that's priced in now.
Right. Although I'm just looking. You can see for yourself. We're back to dead even right now.
Yeah, we're back to